The broadcast is now starting. All attendees are in listen-only mode.
All right, everybody, ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I will be once again your presenter for today's webinar. Today it's the market movers for the 8th of May 2018. We want to have a look at the markets together and see what's moving right now and look for potential trading opportunities. Just as always, if you have a look at your webinar interface, you can see that small questions box. Right now, I would appreciate a very short yes or why in that box to just let me know that both the audio and the screencast are working properly, and let me change those slides. Perfect, guys. Thank you very much. Really appreciate the feedback here. And just as always, again, if there are any questions, if something's not clear, if I should elaborate a little bit more on those ideas and concepts that I want to discuss today, please don't be shy. That's what we're here for. We want to learn something together. I want to give you guys the opportunity to look inside my head when I'm looking at those charts. And for that reason, please ask questions. You're not interrupting my flow. You're not nagging me in any way. That's what we're here for. That's perfectly fine. So don't be shy. Today's session is scheduled to run for around about half an hour. And of course, before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through them carefully and make sure that you are okay with them. Essentially, this says that trading, of course, involves risk, and you should understand those risks and the risk associated with the instruments you're using before you are getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, so please make sure you're okay with this before continuing with the webinar. In here we do have the Nadex risk warning. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile, and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. Today's agenda, but I see that most of you guys are our regular attendees, and thank you very much for stopping by again today. Agenda, just as always, we want to have a look at the markets together. I want to approach my trading from a strategical point of view. I want to have a clear plan, what I'm looking for. I want to trade the same pattern over and over and over again when I'm looking at those charts. I want my trading to be boring. I want it to be repetitive because this is the way that I'm actually making money in the markets. I'm not looking for excitement. I'm not looking for something interesting or dangerous or thrilling. For this, I have my pastime activities. Trading is a business. And a business should be boring. A business should make money continuously. And the way to approach this is for me to have a clear-cut process and make sure that we are following that process all the time. Bill is asking if we are live yet, and yes, Bill, we are. Just a quick question again to you guys. You should be seeing that agenda slide right now, and let me change that again here to the to this one, and let's just bring in the charts. And guys, just a very brief yes or why. If you guys are still with us. Yeah, perfect. Ludmila, thank you very much for the feedback. Really appreciate it. Yeah, all right, guys. So here we are. We're looking at those markets. I want my trading to be, it should be following a process. It should be following a blueprint. I'm looking for the same things over and over again because I want to have an edge when it comes to my trading. This edge usually means that I should have identified something on those charts, which allows me to potentially have more potentially profitable trades on my hands than losing trades. And those potentially profitable trades should also be larger, should produce larger potential gains than the losses that I will have on those losing trades. Trading is not about having only winning trades. That never works like that. Trading is all about probabilities and statistics. And so you want to have probably more potentially profitable trades on your hands than losing trades, and those should be larger. Those two things together, done over and over and over again, this is what should give you your edge when it comes to trading. It's never about that next one trade. It's never about having only profitable trades on your hands. It's about having that edge. And this is what a trading strategy can do for me. So what is it that I'm looking for when I'm looking here at the euro against US dollar? First thing, why is the euro US dollar currently interesting for me? Well, what do we see on this daily chart? I can see that this market has been in an uptrend. The market moved sideways for some time, and you could think the big trend here still was to the upside, but again, we see this sideways move here, went for quite some time. Yes, this was a higher high compared to this one here, but again, definitely lower than previously here. We made another run here for that level, a test of this level. Guess what? That test of this level failed. And sure enough, in all this time in between, you can see how much momentum we have lost during this sideways phase. Was a breakout to the upside very likely here? No, it wasn't. It could still have happened, but everything on this chart here suggested this market is moving sideways, and the bulls aren't really too much into it. There was a lot of doubt, and you can see steady loss of momentum. Also, RSI is making lower highs here all the time. And by the way, this is the only way we're using both RSI and MACD here at Trade with Position. We are looking at those as confirmation indicators. We want to see that we get convergence with MACD and RSI. I do not care about MACD and its signal line or its trigger line. Guys, I never know what is the signal line, the trigger line. I only care about the MACD line, the blue line. And the one thing that I want to see is that if the market is making higher highs, I want to see that sure enough, MACD and RSI are also making higher highs. And this is something that we were able to see here. We see that price was making a new higher high, and sure enough, compared with the previous high, MACD also made a new higher high. And here we started to see some issues. We saw, yes, first thing to note here, the pullback was rather deep, way beyond our moving average buy zone, the 10 and 20 period moving average. The moving averages here already had started to close down again. Definitely not a sign of strength, rather of weakness, pulling back. But however, price made a new higher high. But look what MACD did. With all this extended pullback here, clearly a lower high in MACD. This was the very first early warning sign that something is not really going strong for the euro and that some weakness might be ahead. And sure enough, the market moved sideways, and now just recently it has started to fall apart. How can I see that this market is not sideways any longer? Obviously, it's broken out of the sideways range, and let's just put that level in here. And you see I just draw this level anywhere on the chart, and I pick my line and I start to tweak around with that line to just give me an idea. Here I see a precise fit. Here I see some precise touches. Here again in this area. All this coming together means that this price level here probably holds some significance, and this is how I put those levels on the chart. This is the same way that this blue line here has been placed on that chart. Identify those levels. Those levels are really important. Why are those levels important? Is this some kind of magic number, and why is price actually paying attention to that number? It's not price that is paying attention. It's always market participants. Those charts don't show me some magical attributes of price action. No, they show me what I can observe from market participants acting in the markets, trading in the markets. And the one thing that it can be observed there is actually price and volume for some of the markets. And this data is what can be tracked. And this is why I truly believe in looking at charts, and why I feel that charts give me an edge. They are a map. They are the history of previous market participants' behavior. And if people decided that this price level here was rather important in the past, and buyers became reluctant to push price higher, both here and there again. And here, sellers became a little bit reluctant. Here, what was resistance before has now turned a little bit into support. People have paid attention to those levels. And guess what? If price is about to pull back to this level, I feel that there might be a decent probability that price or that the market participants will pay attention again to those levels and will react to those levels. The next thing to note here is while price has left this range and is trading now lower, my moving averages have started to fan. This fanning pattern that I'm looking for is that the 10 period moving average in this downtrend is below the 20, is below the 50. Ultimately, if this downtrend continues for longer, the 200 period moving average will also fall into place. But on that time frame, with this trading decision making process here, I feel that the 10, 20, and 50, that's the main stage that I want to be aware of and understand what's going on there. If the 200 falls into place, icing on the cake, nice to have, but no, not really that crucial for me here right now. So what I'm seeing here is that price is in this downtrend. I have started to see my fanning pattern, and this trend is currently, this move is going strong. Those moving averages here, if I was to draw arrowheads at the end of each of those moving averages, they would be all pointing in the same direction, pretty much the same angle. I only get this if I do have a strong trend, and I would have gotten this here in this uptrend, but here on this sideways phase, those moving averages 10 and 20 were all over the place. No clear structure, no clear direction going on here. I wasn't really sure what's happening next. Here, I'm also not sure what's happening next, but I have a decent probability to assume that the overall picture of this move here might still continue to be to the downside. Now, price is moving lower. The question is, where is price right now with regard to its averages? One attribute of price is that price tends to be mean reverting, which means price is never pushing too long in one direction. At one point in time, it's coming back to its averages. And this is something that we can observe here. Price has been shooting higher. It came back. Where did it come back to? To its moving averages. 10, 20 period moving average, buy zone. Price was overextended here. Price pulled back. Price pushed higher, price came back a little bit. Price pushed higher, price came back. And so I feel that at those price levels here right now, price might actually be overextended. Price might have moved away too far from its moving averages, and some correction might be imminent. I do not know this. I don't have a crystal ball. It's just stacking probabilities at that point. I see that this trend here goes to the downside. I see good strong momentum here. RSI is making lower lows, as is MACD. However, right now I feel that this counter trend move on the daily chart, a pullback towards those moving averages might happen. One way to check if those moving averages or if there's some kind of cluster, some kind of target that we can identify that I like to use is I like always to use my Fibonacci retracements. And the way to do this is I pick the most obvious recent swing point high, which would be here. And I'm going now here to draw this to this low. And for the sake of visualization, I'm moving here to the right side, and you see round about here. So what can I see here now with those Fib retracements? A sweet spot for those Fib retracements, for those pullbacks, might always be 50% and 61.8%. So a pullback could take us here into this area between the 50% and 61.8% retracement. Judging and eyeballing from the chart, I feel that this currently might be a little bit on the steeper side. I would assume that a pullback towards this area here of 120, let's call it 129, this would put us here in the moving average sell zone. It would put us here in this area between the 38.2 and 50% retracement area. I feel, just gut feeling, eyeballing it. What is gut feeling here? What we're trying to do here, and that's the same way, by the way, you could also say we can forget about MACD and RSI. How fast is a move? How much price distance has been traveled, has been covered over how much time? And what would still look harmonic? What would still look good for the pullback? And in the end, you can do away with all those indicators. They will always show you just what is already on that chart with price action. indicators can never create more information because the only input that usually goes into them is just price action. And therefore, they cannot create new information. They can just highlight certain aspects of price action and make it easier to spot those. And this is when we're scanning here for convergence and divergence. This is actually just, we could do this by eyeballing how fast has this move been here. Let's come back to this period here. Price has been shooting higher here quite fast. Little pullbacks, nothing really major going on. Price has been shooting higher. And now we get another pullback, but just compare it. This pullback was deeper here. And the next thing to notice here, those pullbacks lasted for maybe 3 to 4 days. Here, pretty much the same thing. And here, this is more like 10 to 15 days. So the pullback was deeper and it took longer. And this together, and the next run up here was only ever so slightly higher. Those things coming together is what creates this divergence here, both in MACD and in RSI. And this is what I mean when I say you can actually arrive at the same conclusion if you just look at the speed of this move here and compare it to the move, to the pullback and the next move higher. And that's the same idea here. If I see that this pullback or this move to the downside has gone so far, and now I expect a pullback to hit this 61.8% retracement level, I feel that this would be pretty deep. Doesn't really just look harmonic, doesn't feel right. So my personal target would be a first pullback here towards this area of 121. Now, let's talk a little bit about probabilities here. I like always to trade in the direction of the trend. If you think about the trend in the market, that's just like the big mighty river, the current in the river. You step in there and you don't actually have to swim very hard because this river, this current just takes you with it. And this is what I feel is what the trend is doing for my trading if I trade in the direction of the trend. Now, the trend here is now to the downside. If I assume, however, that price is pulling back, I have to be aware that this could be now a counter trend trade, which means I'm not swimming with the current, I'm swimming against the current, which reduces my probabilities. And that's the point where I would think about my risk management and would say, all right, I'm usually risking about 1% of my account on any one trade. If it's a trend following trade, here I would be going against this move, against a counter trend trade. If I was to speculate on this pullback here, I would trade smaller there. I would be just risking 0.5% of my account on that trade because it's a counter trend trade. That's the big picture here. That's the big stage that I'm seeing on the daily chart. I always like to check what the daily chart is giving me. I can drop now down with my time frames, have a look at the 8-hour chart, and here I see much more pronounced this beautiful downtrend on the 8-hour chart. I see those pullbacks always back towards my moving average sell zone, and I can start to look here, for example, at the 4-hour chart. And once again, you see this move to the downside, you see a pullback. What do we get here? A small bearish candle setting up in the sell zone and price is going lower. Price is pulling back. Where does it pull back to? Moving average sell zone, and price continues. And once again, and again, and again. And that's the kind of pattern, those kinds of pullbacks that I'm looking for all the time. It's boring as hell, but if you do it often enough and if you do it correctly, there's a decent probability that those could be potentially profitable trades. Now, the idea here is if I was to speculate on this counter trend trade, I would now have to drop down with my time frames. And guys, I hope you can see the trend on the daily chart is down. The trend on the 8-hour chart was down. The trend on the 4-hour chart is down. So obviously, if we now want to speculate that we get a pullback, we are now leaning very much against multiple time frames here. If we are looking here at a 5-minute chart, for example, yes, we start to see this pullback is on the way. We still start to see that maybe on the 15-minute chart, yes, this pullback was also way deeper. And by the way, we have a change of trend here on the 15-minute chart because we actually made a higher high. We saw lower lows and lower highs here on this move. Now price is pushing higher. The moving averages have closed, and the very moment we took out this high here, with this large green candle, we established a new trend, or at least this downtrend was over, because now we actually made not a lower high for a pullback, but we made a new higher high. The idea here might be to wait for a pullback to the moving average buy zone and then look for a trend continuation to the upside. But I want you to understand that this is actually a really high risk trade, because it's just the 5-minute chart that is telling me here that that trend has changed. The 50-minute chart, yeah, probably. If we go to an hourly chart, this is still a pullback here. And if you tell me now we're looking for a small bearish candle setting up here just below this level, and I don't think that the 2-hour chart is overextended. I don't think that the 4-hour chart is overextended. I feel the 8-hour chart is just doing fine, and the overextension on the daily actually doesn't matter that much to me. I'm completely there with you. You have to pick the time frame that you want to go for, and you have to pick your battles. So if you're looking for something on the very short time frames here, hourly chart for example, looking for a potential shorting opportunity here below this level, nothing wrong with that. Again, I don't have a crystal ball. It's not a trade recommendation. You must own that trade. You must understand why you took that trade, but that's the way that I'm looking at those charts and how I would approach now trading those potential markets here. For me personally, that overextension on the daily chart is a little bit too severe, and probably this is why I would keep a little bit of, would be reluctant to actually short this market now on the lower time frames. But if you sent in that chart to me and said, Philip, have a look at that, I'm looking for this candle here, and we're good to go. The only thing that I wouldn't like that much about this chart is that the 10-period moving average now has started to pull back a little bit. But if we get this bearish candle in the next candle, small candle there, I'm perfectly fine. That would be a nice trigger and setup, and no critique from my side on that potential trade here. I always have to wait for that candle to finish printing. So can I trade this bar now? No, because this is a bullish candle. We're pulling back towards those levels, and I'm looking for additional probabilities. I'm looking for a way that I can assume that this pullback here might be over. And I don't see that yet. The only way I would be able to see that is if I got that small bearish candle setting up. So when would be my trading opportunity? My trading opportunity would be in around about 1.5 hours, maybe. Because I feel this candle here can never actually give me a tradable bearish candle while it's printing. The only trigger candle that I can get is the next candle. And this next candle would start in half an hour and be finished in around about 90 minutes. This is how you can actually plan your trades. You don't have to watch the markets all the time. You see something that's interesting to you, you see the pullback, and then you anticipate, okay, this candle won't be able to give me my setup. The next candle might do, but it's enough for me if I come back to look at those charts in, maybe in 80 minutes. Something like that. I don't watch the markets all day. I search for my opportunities, I time them, and when it's about, those candles are about to close, then I'm coming back, then I'm looking at if that setup is there, and then I raise the order. I hope that makes sense. Let's jump to US oil, which is of course WTI Crude. And let's have a look at the daily chart. The market has been currently trading around not all-time highs, of course, but the highs of the last 3 years. And we have left this range of 45 to 55 now, definitely for good. Price has been pushing higher again. Now, we still had a small candle here just a few hours ago, which is a pity, because when I prepared for that session, that was my message that I wanted to give you. Let's have a look at the structure of yesterday's candle. This is a bearish candle. Why is it a bearish candle? It has a green body because it has this long upper shadow. And this long upper shadow tells me that the market tried to push prices higher. It was about to give us the next big green candle just like here. But something was not right. Sellers became more daring. Sellers became more aggressive. I don't know. We still have to think about the upcoming decision of President Trump, and considering the Iran atom deal. All this is influencing those markets. All those are fundamental things that we might be aware of. However, buyers really were reluctant. And the candle structure until just a few minutes ago, or half an hour ago, was a very, very small, indecisive candle. Small body. Small upper shadow, small lower shadow, and the body was just sitting in the middle. All this was suggesting to me, all right, we had a bearish candle, huge bearish candle the day before, indecisive candle, some kind of pullback might be imminent. And sure enough, this is what we got now. So, and you can see this move here on the hourly chart. This was really a very quick and fast move. Let's have a look at the 8-hour chart. Yeah, pretty much here. That was the kind of candle that I saw there just before the session. And sure enough, price went lower and got us back to where I thought a pullback might be imminent. Because once again, yes, we moved away from the moving average buy zone. We got a bearish candle, we got an indecisive candle, and therefore I thought and anticipated that this move back to those price equilibrium levels might be imminent and might be bound to happen. And guess what? It already has happened. What's the game plan here? Obviously, counter trend trade would have been to speculate here on this pullback. Perfect trade would have been here, for example, using Nadex contracts to enter with a spread near the ceiling level of that spread, and then just participate here with a move to the downside. Or you might have waited here with some kind of buy order in the buy zone for potential long trading opportunities there. So much here for crude oil, and we have to speed it up a little bit. Sorry about that. I also wanted to briefly cover here another two markets, and the first one is the good old S&P 500. Now, what is the S&P 500 telling me here on this chart? Let's just zoom out really far. What is it that we got here? We got a beautiful long uptrend, and then after that, a lot of noise. We had some highs, again, a little bit higher than previously, but far from here. And next run up here, but it's a lower high again, and once again a lower high. However, those highs, those lows here actually seem to be rising. The big picture here, I don't know what's going on. Everything could happen. You can see that the moving averages have now fallen into place here for a potential downtrend. The 10 is below the 20, below the 50. Everything's very close to the 200. Is it tradable? Is it a clear setup here? Anything that makes sense right now? No, it isn't. Again, lower high here. It's just, we see this compression phase here. We see this phase where volatility, not implied volatility, historical volatility, those moves. Wait a minute. Those candles obviously are larger. However, all this, you see this contraction phase. We would be able here to draw in some triangles. I don't believe in sloping trend lines. I don't feel that those are really actionable, but this is what I mean here with this compression phase. Let's not talk about volatility, because just judging from the candle size, obviously volatility is larger. And as fear is coming into the market, implied volatility, of course, also is definitely higher than during this whole bull run here over the last few months and years. So not clear really what's going on here. With Nadex contracts, you're not limited to trading the S&P 500. You have also access, for example, to the German stock index, which is the DAX. And if we compare now what we see here and those other markets like the DAX, play around with those other markets, have a look what those tell you on the chart. The overall picture here, definitely not so much bullish action here over the long run compared to the S&P 500. But once again here, those moves to the downside, not really as pronounced. And now just recently, we've started to see the market making new higher highs, new higher lows. We're pushing for another new higher high. And we're trading here very close now to this 13,000 level in the DAX. We are overextended here. We have now traded just right into this level here at around 12,914, 15 points. Once again, if we're overextended, if we have now traded just into resistance, what might be happening next, I don't know. But if you tell me now that you think that we might see a pullback here towards price equilibrium levels and then try for another run higher, I would completely understand your reasoning. We see convergence, prices making higher highs. Yes, sure enough, MACD is making higher highs, RSI is making higher highs. Do I think we will now just push through? Not sure. Overextended, resistance, we might be pulling back. The main takeaway for you guys here from that chart alone is, what would you rather trade? This market, which gives you at least some kind of structure with moving averages fanning, or would you like to trade rather your home market, the S&P 500, which currently isn't as telling us anything? Stay open, have a look at those different markets available here for your trading. One of the huge benefits here with Nadex contracts, you have access to many different markets from just one single account. So use that advantage, use those benefits, because it doesn't make sense for me to trade a market which is just not showing us those signs, those kind of chart structures and patterns that I need for my trading. I trade the same thing over and over and over again. And if a market isn't showing me that, I don't trade that market. I move to the next market. Maybe I'm looking for different time frames, but I want to have my bread and butter setup, and I want to trade that day in and day out. All right, guys, we're already at the end of today's session. Yeah, just like always, I hope you enjoyed the session. I hope you learned something new. Any feedback is really appreciated. We are running those sessions for you. So just tell us what you like, what you didn't like, what you would like to see, and we're more than happy to consider that and put that into action. Guys, thank you very much for joining. And yeah, looking forward to talk to you and catch you again next time. Thanks again. Take care and bye-bye.